Hi, and you're watching The Week Ahead with London Capital Group, taking a look at the market-moving events for next week. That's the week beginning Monday, the 29th of June. Now, joining me now is London Capital Group's head analyst, Brenda Kelly. Brenda, thanks for joining me.
Thank you.
Now, let's start with the Japanese yen, because Japan, we've got some industrial production and retail sales coming out next week. That's overnight on Monday. What key levels are we going to be watching out for Japanese yen?
Well, certainly we're expecting to see a lower level in terms of the retail sales for May, about 2.3% year on year versus the 4.9% the previous print. Equally, with regards to industrial production, that's expected to be slightly weaker at 0.7% month on month against 1.2%. So I think it's this stage in the game what we're looking for is good support around the 122.50 level, which has had some nice bullish candlesticks rising off that. If we come back towards those levels, you would expect to see the similar buying step in. And what we need to see really now is a break towards the 124.50 if we're going to retarget the highs that we saw. But I think the dollar momentum is still there, and despite the fact that Japan's GDP and indeed most of the macro from them recently has been fairly decent, we are expecting that the difference in monetary policy is going to side with the dollar. So I would expect to see a retake of the 126 level in the near term.
Okay, well, touching on Greece, it's hard not to do a week ahead without touching on Greece, obviously. It's a big day for Greece next Tuesday, the 30th. Make or break meeting for the Eurozone finance ministers, as I understand, is coming on Saturday. Are you expecting a weekend deal? What's your base case scenario here?
Oh, well, I think we've had so many headlines and deadlines for Greece that I start to kind of take a little bit of umbrage with these new, this is going to be the end of it. I do feel that we will actually fudge a deal over the weekend. There is a rumour that we're going to see a 5-month or 6-month extension to the bailout agreement for the time being. What's really important for Greece is that they hang on to the emergency liquidity assistance from the ECB. If that starts to falter, and of course that can do it, all it takes is 3/4 of the governing body of the ECB to decide that it is working against the overall Eurozone policy, then we have a problem. Then we have capital controls. But as it stands, it does seem that despite the fact that Greece have, I suppose, very little left in the armoury, that they will have to blink first. And of course, IMF, whether they get paid or not, we're down to semantics right now. Is it going to be a default? Is it going to be arrears? I think the general expectation is going to be a little bit delayed, but for the time being, I think Greece will ultimately come through. Even a bad deal is better than no deal at all.
Sure. I mean, in that case then, what are your expectations then for the euro and equity indices at the beginning part of the week?
Well, the ironic thing is that we have seen peripheral bond yields and, of course, German bonds actually rising in, I suppose, concert together on the back of this uncertainty. And if Greece does actually blink first, then we could probably expect to see those yields deflate ever so slightly. And, of course, the euro should follow suit. For the time being, I think 112 is the massive big level, 120, 112.50. If we come back down towards the 111.30 level, then I do feel that the next trajectory will be the 110.50. So, ironically, a deal for Greece will be negative for the euro and vice versa.
Okay, well, the other crucial event on the agenda next week is definitely NFPs on Thursday rather than Friday. Obviously, the US markets are closed for independence. We are expecting a drop in new jobs added, are we not?
We are expecting a 229,000 jobs added, and I think in some respects that keeps it above the major metric. Anything below 200,000 is considered to be negative, but it's keeping it on an even keel. The trajectory is working quite well. Unemployment may have spiked up a little bit to 5.5% last week, but I think on the grand scheme of things, it's working towards Yellen's metric. But I think moreover, you've got to look at like consumer prices, inflation, and you also have to look at consumer spending, and not all of those are falling in line with the employment for the time being. So I still maintain that the Fed will hold back on hiking interest rates until at least the very end of the year.
Okay. Well, moving on, we've still got Riksbank on Thursday as well. Are you expecting much movement from Riksbank? There's the idea of either whether they're going to stay on the sideline or whether they are actually going to adjust interest rates, but bearing in mind inflation and the recent rise in inflation. What are your thoughts?
We have seen a recent rise in inflation. We could expect them to be sidelined, but I could actually, price in a bit of a surprise there. Obviously, we've seen about 29 different central banks actually adjust their interest rates and loosen monetary policy over the last year or so. So why should the Riksbanks be any different? I would be very neutral on this for the time being, and I think it would be a surprise to the market markets if they do actually make any difference or change the interest rate decision. But again, I wouldn't necessarily put my money on it for the time being. We can expect to see a certain amount of dovishness from them, but whether or not they act on that remains to be seen.
Okay, well, finishing off then, looking at next week, what do you see as perhaps the biggest trading opportunities to look out for?
I like cable. I've always liked cable. I do feel it does generally work in context with the euro dollar, but I do feel that given the better macro picture for the UK, vis-a-vis even that of the US, we could actually see a better move on the pound next week. UK services PMI is due out next Friday. We're expecting to see a slight increase on the previous month, 57.5. That I could expect that to beat. And of course, the main level there for me is the 157.67, the lows of this week, and if we manage to hold above that, I think we're in a nice big trajectory upwards, and we could target the 160 level.
Okay, so interesting levels to watch out for. Brenda, thank you very much. And that's all in terms of the economic calendar. On the corporate side, just to touch on, we've got half-year results from online grocery retailer Ocado Group. They're coming out on Tuesday. And we've also got followed by full-year results from Green King and a trading update from Tullow Oil as well. Not forgetting, we've also got a trading update from UK house builder Persimmon as well next week. That's all for now for London Capital Group's Week Ahead. Join us next week. Goodbye for now.